Welcome to Global Money Talk, brought to you by Sempro TV. Greetings to all of our viewers from across the U.S., Korea, and around the world. We're coming to you live from the floor of the New York Stock Exchange in New York City, the financial capital of America. I'm Remy Blaire, and joining me today for a market briefing on this election day and to weigh in on the top stories is Tai Wong, independent proprietary trader. Tai, good morning. Happy election day to you.
And finally here after what seems like an interminable period. Before we get to talking about that, we have a lot to talk about. I've just been told it's National Donut Day.
Yeah. So apparently down at the New York Stock Exchange cafeteria, if you get a cup of coffee or tea, you get a free donut.
I think I might have to do that right after the show. Also, interestingly, today is Guy Fawkes Day. Now, I worked with the British, or the English more accurately, for many years, and Guy Fawkes tried to blow up the English Parliament in 1605 on November 5th, and they caught him before he set 36 barrels of gunpowder off. So it's a gunpowder plot, and they celebrated actually because he failed, because that would have been sort of the end of the English Parliament at that time. Also, of course, birthdays, Bryan Adams, summer of '69. I'm not going to try to sing anything of that. And then, of course, an actress from even before my time, the great Vivian Lee, played Scarlett O'Hara on Gone with the Wind, was her birthday.
So today is an important day, not just in the U.S., but also across the world as well. And all eyes are on the U.S. on this election day. Tai, I think it would be befitting to start out by looking at the markets before we dive into the election. So we are seeing green across the board for the major averages. The Dow Jones Industrial Average is higher by over triple digits this morning, up by nearly 272 points, 4.6%. We're seeing higher trading for the NASDAQ as well this morning. The NASDAQ Composite Index is up by nearly 0.9% this morning. And the S&P 500 is also trading higher on this election day, up by 0.7%. So Tai, of course it is election day. We're going to be up pretty late, I'm sure, as we watch some of the polls to start closing here. But as we head into the rest of today's session, give us an understanding of what you will be watching.
So let's take a look at graphic 1, and this is I put together how to watch the election. So it's basically ranked by what time the polls close in some of the important states. Then that's all on Eastern time. I sent them to Eastern time so we have a good reference. So generally how the media works is, as soon as polls close, they will release their exit polls, and they'll give us an idea of what we're looking at and if there are any surprises. The counts don't come until later. The first two states to close are Georgia and Virginia. What's important, Georgia obviously an important swing state, though looks like Trump will have the edge there. It's important to see what his margins are. Is he outperforming what they thought he ought to be doing? In Virginia, it is very unlikely that extremely unlikely that Virginia will turn red, although the governor, first Republican governor in probably 16 years in the last term, but I want to look at the margins in Virginia. How much does Harris win by? Is it bigger or smaller than what we think? We'll probably have those decisions. We'll know about Georgia and Virginia by Wednesday, sometime Wednesday or Wednesday morning in the case of Virginia. And then the later ones, North Carolina, which is critically important, closes at 7:30. Now, because of that storm, if it's really wafer thin close, it could take 2 weeks for North Carolina to really complete counting. So, I mean, it is what it is. Ohio is now really a red state, but what's important there is there's a big Senate race by long-term incumbent Sherrod Brown against a Republican, and that's a toss-up. So that'll tell us potentially a lot about interest, and that could take a week. Anyway, I won't go through all of them, but if you take a look, or you go back and take a screenshot of this, you'll see the important states will go all the way up to 10 o'clock. And once again, we're looking at margin. We're looking at certain things that'll tell us maybe a little bit about the House of Representatives. But that's how I'd be watching. I'm going to be up till probably at 6, and that'll be the first thing I look at. So tomorrow, if I have bags under my eyes, you will know why. So I just had some we've talked about it a lot, but I think there's some really interesting anecdotes that I've sort of picked up, and I've seen over the past couple of days. Well, one, we had Joe Rogan endorse Donald Trump after Trump literally begged him on the show when he appeared about a week ago to say, come on, Joe, you're not a Kamala guy. Well, he did come out and endorse Trump last night. I mean, it's pretty late. I don't know if it'll matter, but nevertheless. The other thing I would say is, I go in different places I've gone. I go down to Chinatown in New York, and there's probably 4 times as much Donald Trump MAGA stuff as there is sort of Harris stuff. The Harris stuff is almost kind of an afterthought. And this is all pointed towards the tourists who come to New York City, and maybe a lot of those tourists are from different parts of America that may support Donald Trump more. Also, in my neighborhood, and my town is relatively conservative. The area I live in is more liberal. There are very, very few, almost no Harris signs. And what that seems to be suggesting to me is there's not a lot of love for Harris. I mean, back in the day, those elections, people loved Obama. I think people still love Obama, but I don't think there's a lot of for Harris. And so the people who are voting for Trump, a lot of them love Trump. They don't all love Trump, but the Harris voters are really probably more anti-Trump than anything. So they're voting on anger and hate. So what do you think? What's more powerful, love or hate?
Well, I am glad you bring that up, Tai. You brought up a lot of important points. So when it comes to how to watch this election, you and I were here in New York, so we're on East Coast time, and it does sound as though you're saying that this is a marathon, not a sprint, and by some of the states that you mentioned and how you broke it down in that chart, it does sound as though this could be potentially an ultra marathon as well. And I think it's interesting that you're talking about what you saw in Chinatown, because I'd be curious, did you pick up any of the items to see whether or not they were made in the U.S. or made in China?
I didn't, but dollars to donuts, and it's National Donut Day. Although we have to change that term, because it used to be you could buy a donut for like 30 cents, and I'd say dollars to donuts. It's really now donuts to dollars, because donuts, are typically much more than a dollar. So I didn't, but I'm gonna, donuts, the dollars that are all made in China or made in Bangladesh. I think China may even be stepping away from some of the really, really low cost, low margin types of things. They still do it, but I don't know. But I'm going to say for sure they're not made in the USA.
Yeah, and depending on where you go in the city or even throughout the state, I think it really depends where you are, because certain neighborhoods in Manhattan or Brooklyn, they tend to lean more towards Harris or the Democratic side. And for example, if you walk around on the Upper West Side, you see more stands selling Harris buttons and hats, versus perhaps where tourists might hang out, as you mentioned, Chinatown or around Port Authority, Grand Central, you might see more Trump gear being sold. So I think given that this election cycle has been so divisive and it has become so polarized, we know that when we're talking about the holiday season, getting together for the Thanksgiving dinner, that can be a contentious time where even if you love your family members, there could be a lot of hate boiling on the table.
It is, and part of that is sad. I mean, I think there won't be that in our family. I think we all kind of lean a very similar way. But you're absolutely right that please let's not talk about politics at the table. I mean, I have a very good friend from high school, and we spoke recently. We had a long conversation, a little bit contentious, but she said, I was afraid to call you earlier this year because I didn't know what you thought about a certain candidate. I'm like, are you kidding? We have known each other for 35 years. You're afraid to call me because you're afraid of what I think on something? That's really, that's kind of silly, right? Between people who've known each other for so long, we surely can talk about certain things. But you're right in terms of, if you go to upstate New York, it's very, very red, and it's just the urban parts of New York State that tend to be blue. I mean, in fact, they talk about Pennsylvania. The joke is Pennsylvania is Philadelphia and Pittsburgh with Alabama in between. So it really is, when you look at the elections, and it doesn't really matter who, whether it's Fox or NBC or whomever you watch, they'll look at the different counties, right? So and so might be leading, but only 20% of the urban counties have come in, and that's important because that suggests that the lead isn't big enough. So you'll see that. I've seen races called because, for a Democrat, because they're down 15 points, but the urban counties haven't been counted, and those 15 points won't be enough to overcome when those counties come in. So we'll see that later. We'll see that later tonight. There's going to be a lot of analysis. People have done a lot of work on this, better than me. But a couple other things. So I voted this morning, so I'm proud to have I voted. I think it is your civic duty. I do believe in voting on election day. The early voting, if you can, some places you can vote 2, 3, 4 weeks in advance. But what if something happens between when you voted and the election day? I mean, it seems like ideally, unless you're serving overseas or you're an invalid and you can't really get there, everybody ought to vote on the same day, then we have the same amount of information. I think that just, it seems better. But be that as it may, I'm not going to change a lot of minds, but I did vote today. And turnout was, I voted at 8 o'clock. Turnout was relatively high. They said there were lines out, by around, a little bit after 6 a.m. When the polls open. I've worked the polls before. I'm not doing it today, obviously, because I'm here. And it is a very long day. When you work the polls, the day is 5 a.m. till about 10 p.m. So that is, that's what 29 hours. No, sorry, that is 17 hours. It's a really long. It is a really long day. But interesting to have actually gone through the process and see how everything works. And the process is, generally very good. The only gap, in my personal view, is when the machines do a count, right? And that count is what gets reported at the end of the night, and that scales its way up. Do they reconcile what actually goes into the machine versus what the electronic count is? I think that only happens about 2% of the time when they do a sampling, or perhaps when there is a recount. So that I think is where the gray area is. When you put your ballot in, you're not 100% sure that the result is accurate. I think it is most likely accurate, but you couldn't guarantee it, which brings a lot of sort of election claims of election irregularities and things like that. I'm not too much you can do with that unless you do a full reconciliation, which will actually make the election a lot longer, but will get rid of those questions. And then let me see, Nate Silver, the 538 guy, really well-respected pollster. He accused other pollsters of hurting in terms of, because the polls are too close. People are putting their fingers on it. I don't like it. He said he ran 80,000 simulations overnight, and Harris won by a tiny, tiny wafer-thin margin, so it's an absolute toss-up. I don't know. He did say his gut was going to be Trump. And then finally, a scenario that I think is worth going over is it takes 270 electoral votes to win the presidency. So there is a chance, small, but a chance, of a 269 to 269 tie. So how would that happen? Let's just say Trump loses North Carolina with 16 electoral votes, but because of the Arab Americans voters against Harris, because of Biden's support of Israel, he wins Michigan, which has 15 electoral votes. That would, all other things being equal, get him to 269 versus 269. And in a case like this, the 12th Amendment of the Constitution rules, and it says that the House of Representatives, and that's the new representatives after they've been sworn in on the first business day of January, they vote for the president by state delegation. So each state gets one vote. All the representatives in the state of New York will vote, the state of New York will vote one vote for president. It's the same value as the vote of the state of Wyoming, which has one representative. So in that case, it seems likely that Trump would win because Republicans hold a few more delegations than Democrats, although you never know with how the House of Representatives is going to shape up the new one. So potential lot of uncertainty, but there is a tiebreaker in the result of the tie.
Yeah, I'm glad you broke all of that down for us, and I think all of this speaks to how big the country is, the country of the USA, and how there's so many moving parts here, and Election Day isn't just about the presidential race and who ends up in the White House here.
Yeah, and listen, the House is up for grabs. The Senate is still it's still a little uncertain. I mean, some of the things that I'll watch out for is that the Texas Senate election and the Nebraska Senate election, and I want to make sure that what happens in Montana is true to the polls. So I think there is still some uncertainty.
Yeah. And speaking of uncertainty, we know that there's uncertainty surrounding the election, but one thing we know for sure, we've been covering the Boeing strike for many, many weeks.
Yes, we have.
I don't know about you, Tai, but I think it went on a lot longer than I had initially anticipated here versus the port strike we saw with the ILA, which ended after 3 days.
Right,
so here
right.
we are on election day, and we can finally officially say that the Boeing strike is ceasing and has come to a close. And given all of the negotiations, we talked about this yesterday, your expectations, are you surprised at all?
So 59% of the workers voted to return to work. A little lower than I thought, and I think it was. You got the sense that they initially asked for 4 years and a 40% pay raise. They got 4 years and 38%. You're not working for 7 weeks. That's 7 weeks without a paycheck or an employment benefit. So I think it was sort of time. But I did a little back of the envelope math on this, right? So according to the news reports, the strikers lost $600 million in pay over these 7 weeks. Boeing is believed to have lost $6.5 billion, but a lot of that is probably income that gets pushed later into 2025. The economy is estimated to have lost $11.5 billion, and that's all the impact in the other states from people that have gotten laid off or because the suppliers to Boeing. So. The back of the envelope calculation, I assume each machinist gets $100,000 a year salary. I think on average that might be about right. So they're going to get, because due to the agreement, they're going to get $192 million over those 4 years, and the $192 million in the bonus that they got. So in essence, they made, and accounting for 33,000 machinists, they made an extra $5,800 discounted over 4 years by striking. It's not a lot of money at the end of the day. And do you know what? I would not be surprised if the next plane that comes out isn't made in the state of Washington. It's made in a right-to-work state in South Carolina. So is this a victory? It really is unclear, but it's for a 7 weeks really acrimonious strike. It seems to have been, was this really necessary in the end?
Yeah, I think that is the big question that everyone is asking. And in New York Morning Trade, initially we saw Boeing shares lower on the session. So we'll continue to keep an eye on what happens with Boeing. But another stock that we're watching this morning is Palantir.
Wow.
And that stock rallied over as much as 20% this morning. So let's take a look at where we are, and right now we're up 22.5%. So this came on the heels of their latest earnings report. Revenue earnings beat Wall Street expectations, fourth quarter revenue guidance above analyst estimates, and also guidance was also beyond expectations. So are you surprised at the price action we're seeing this morning?
Yeah, 20% is a lot.
Yeah.
It's a lot. I mean, they beat on earnings, as you said, beat on earnings, they beat on sales, they beat on guidance, and they said unwavering AI demand. So a little background on Palantir. One of the co-founders, Peter Thiel, who is a really controversial figure in Silicon Valley. He's gay. He supports Trump. He has supported Trump and supported a lot of Republican candidates. Sort of a free speech absolutist kind of guy. And Palantir actually comes from Lord of the Rings. It's the seeing stones that one of which that the wizard Saruman had that you could see. So what does Palantir actually do? They're they were like the original really big data company. They figure out how to use and dice and big data. Have always been deeply ensconced within the defense establishment, in the military, helping. Well, one of the first things was helping people figure out things about September 11th and looking at data. And in recent years, they've gotten to have a big commercial business, and now they're sort of big data, but they're also now AI-driven big data, which is why they're a little bit of a bet on AI. And I think next year they said their commercial business will finally be bigger than their business with the government. And they don't really have a big competitor in here, and I think it's hard to get in with the U.S. government if you're, to get access to all this data that you're doing for the U.S. So really, like, I mean, it's a roaring jump. I mean, 20% seems a little high, a little much. Maybe you need to retrace it a little bit. But a great report for Palantir, sort of as opposed to someone like Archer Daniels Midland, which they had to restate their financials back to last year, and I think that thing is down, probably I think 10%. Because they had bad trades, dodgy trades between internal divisions. Which, as a banker, a former banker and trader, you always know there are very strict rules about how each division, at least in the banks, can trade with each other. So you can't sort of inflate earnings, which it sounds like just by the headlines what Archer Daniels Midland does. And whenever you have to restate earnings, it makes everybody really, really worried. Like as Dan Hall loves to say, in a great culture, the things that I uncover are going to be good. In a bad culture, good Lord, I don't know what I'm going to uncover. The same thing here. Supermicro Computer had their auditor quit. Yep. I think that stock has been awful this year from the highs, but I think it's down like another 40% because what are we going to find? And it's one of those, whenever if the auditor quits or they restate stuff, that stay away. There isn't, it might be really cheap, but what we call in the business, it's like catching a falling knife. You may not want to catch that one until it's really, really down, 90%, and you figure, I'm happy to lose whatever money that I'm going to put in, because I think it's going to bounce and they have a good business.
Yeah, from a safety perspective and investment perspective, you do not want to be catching any of those actual or
falling
metaphorical
knives like they do in the cartoons.
Absolutely not. So before we wrap it up, I do want to quickly take a look at Bitcoin, because I know you wanted to take a look at that. And although we have not been able to recover the 70,000 level this morning, we know that we approached that close to all-time high, and we'll keep an eye on the levels depending on the outcome of the election as well. So are there any specific levels that you're watching right now when it comes to Bitcoin?
I think the 70,000 is a pretty critical level. We missed the highs at 73,600, I want to say was the high here. I think if it's clear that Trump is going to win, I think Bitcoin will make a new high. But what's interesting is, looking at the options markets on Bitcoin, short-term, short-dated options are typically price maybe a 2% move up or down in Bitcoin, but options this week are getting priced at an 8% up or down move, and that means suggesting the market thinks that the break even could be 8% either side. So if you're selling options, you're not selling them very cheap because of the huge volatility in over the next few days. In addition, Bitcoin's going to trade all night. So meanwhile, while stocks have extended hours and futures, but Bitcoin will might react a little bit faster and in a more extreme way. On the downside, I could really see if it looks like it's going to be very, very close, or Harris nudges ahead, I could easily see it down under 65,000, just because I think there remains some length in the market. I don't think Harris is horribly, horribly negative Bitcoin, but certainly lower. So new highs, if Trump looks like it's clearly going to win, and maybe a dip down to 65,000 if the result looks like it's the other way.
Well, Tai, you bring up an important point when it comes to the crypto market, because unlike the stock market, for example, crypto trades 24/7. And when we take a step back and look at what happened this campaign cycle, the attempted assassination of Donald Trump earlier in the summer, we were keeping a close eye on crypto, especially Bitcoin, and we saw that trade over the weekend. Yeah, so as we head into election night here in the United States, we'll keep an eye on where crypto trades. But very quickly, before I let you go, in terms of options, explain to us how this works when it comes to Bitcoin.
So you could buy options on really probably on any strike. So let's say you'd say I think Trump is going to win, and I want to buy an option, and I think it's going to go to new highs. I'll buy a call option, right here at around 68,000, and let's say I buy it on 100 Bitcoin, right? Well, the guy who sells it to me, he's a businessman. He's not really a he's not taking. He doesn't want to take a bet on Bitcoin. So what is he going to do? He's going to, if he sells me a call, he's going to buy 50 Bitcoin right now to hedge it. If it goes higher, he's going to buy more. But if it goes lower, he has to sell some of the Bitcoin that he's bought because my option is not likely to go into, is less likely to go into the money, and he can't be long in case Harris wins. So imagine if it goes like this, that guy's going to be, selling low, buying high, the whole time, and that's costly. And that's why he's charging me, basically 8% on a short-dated option. Because he has to hedge, and that hedging can become really, really painful given the volatility that is likely over the next few days.
Well, hopefully we don't see too much volatility over the course of the next 24, 48 hours or the rest of the week for that matter. But Tai, we will be back bright and early tomorrow morning to talk about the outcome of today.
Absolutely.
Thank you so much, Tai. And coming up, I'll be joined by Dan Pan, Vice President of the Lakeshire Group at Raymond James. Don't go away. Welcome back to Global Money Talk live from the New York Stock Exchange. Today is November 5th and it is election day here in the U.S. We'll continue to keep an eye on what happens as we edge closer to the end of the day. Now, Kamala Harris does want to raise taxes on the rich, while Donald Trump wants to cut income taxes and raise tariffs. If either party controls both the White House and Congress, it will be clearer if these plans become law. We all know a divided government could mean less action. But both presidential candidates propose expanding tax credits or removing taxes on Social Security and tips, but these policies will need to be paid for, possibly by raising tax rates. Back in 2017, Trump passed a tax cut law that lowered taxes for many, but those cuts expire at the end of next year. Meanwhile, Harris does propose a 28% capital gains tax for high earners and a surtax on investment income. Trump, meanwhile, wants to extend the 2017 tax cuts, but taxpayers worry taxes could still rise under him due to the nation's economy. Well, joining me this morning at the New York Stock Exchange is Daniel Pan, Vice President of the Lakeshire Group of Raymond James. Thank you so much for joining me today.
Oh, it's my pleasure, Remy. Glad to be here.
Well, the countdown is on. We've been anticipating this day for many weeks, many months. So first and foremost, give us an understanding of what we can expect, and in terms of what you've been telling your clients, what has the tone been, and what have you initially been telling your clients?
Sure. No, it's a great question. So, it's a question I probably get asked multiple times a day from different clients. And, while I do point out that there tends to be heightened volatility kind of leading up to the election, the winner itself rarely has, much effect on the market. In certain situations, Republican markets have performed a little better. In other time frames, Democrats. So the message really for us is just to, stay the course, and then when the victor is declared, if there are any rebalances or any changes that need to be made, let's do that. But for now, we are entering the seasonally strongest part of the year for the market. Elections are themselves a catalyst, so if anything, it's maybe even a time to put a little risk on if you're feeling inclined.
And I think one very key thing here is to take a step back, because there is a lot of noise this election cycle. And when we look at the Dow, the NASDAQ, S&P 500, we're still holding on to double-digit percentage gains for the year. But when it comes to taxes, Dan, I do want to ask you this. How might tax policies differ under a Democratic versus a Republican presidential administration?
Sure, that's a great question. And you did kind of tip on some of that, mention some of those things, but really, when we talk about it, from an income tax level, Trump would likely allow the 2017 tax cuts to expire and would likely want to keep them in place. I mean, even potentially lower them, whereas Harris would potentially raise the top level, and she would focus her efforts kind of taxing the ultra-wealthy and the corporations. She is actually giving more for child tax credits and deductions than Trump is, which is going to help a lot of families. It's a good thing. And then, the corporate tax rate, again, Trump will likely try to decrease it, maybe even to 15%, where Harris will keep it kind of constant, probably not increase, but keep it constant. And then one other thing is really estate tax. So the current estate tax exclusion right now is close to $14 million. If Trump were to get in, he would most likely look to keep that in place, whereas Harris may look to take that down to closer to 3.5 million. So, it is a big difference. It just depends, what type of person is going to affect it,
And there is a saying here in America that when it comes to certainty, death as well as taxes are a certainty.
It's always certain.
And we know there's been so much uncertainty this year, whether we're talking about monetary policy, when and how the Federal Reserve will move. But here we are on Election Day, and we're looking ahead to the rest of this year. But of course, what sectors are you paying attention to? Because as I mentioned, we've been seeing strong gains for the S&P 500, up 20% year to date. And some of the sectors that we've been seeing strengthen, not surprising given the AI play here, communication services, IT, and of course utilities when it comes to that AI play as well. But we're also seeing financials higher as well. So in terms of sectors, what do you think will do best depending on who ends up victorious or irregardless?
That's a great question, and I could probably give you our sector outlook for both people winning, but one thing that I've focused on with my clients is what sectors or what subsectors are going to perform well regardless, right? Because I feel like we have a little more control over that, and the more information you have, the better your investing typically is. So, for us, we really like the energy sector a lot because we believe that just because of some of the deglobalization and onshoring, we believe that there's going to be a lot more energy permitting that's going to allow for more fracking and more domestic energy production. And again, that's kind of regardless if Trump or Harris wins, right? So we like that period. Even critical minerals, if you kind of follow the same rationale as the energy reform, critical minerals, whether they're used in batteries or other computing parts, that's also something that's kind of coming back with the onshoring and protecting your assets. So we do think that the critical mineral space is going to get paid a lot of attention to, and something that's going to work well. And then AI, we love it. I mean, Palantir's earnings yesterday were fantastic, and the AI revolution's here and it's going to continue. So we can always stay with that. I love AI, but I think one thing we've noticed is that there are some technology restrictions coming in with China and with Huawei and sending chips over and whatnot. So we think that if you're owning tech companies, you really have to know what their China exposure is, because that's always a potential issue. And then last but not least, let's see what we got. We also think the semiconductors are going to be a good place to be because it's the similar theme as the minerals and the energy, but with the onshoring and us wanting to have greater control of our infrastructure, we think the U.S. is going to pay extra attention to semiconductors, and we like that space.
Well, Dan, it does sound as though there are a lot of moving parts here, especially when you go sector by sector, because whether we're talking about critical minerals or energy or even semiconductors,
Sure.
We know that each sector has its own opportunities as well as risks. And I'm sure one thing that your clients have been asking you is about monetary policy here in the United States, and we know that depending on the cycle that we're in
Sure.
and what the Fed will do next in terms of the long run, it will affect businesses as well as investors. So what is the conversation that you're having right now regarding the rate outlook here?
Sure. No, it's good because the funny thing is that rates have really increased since the rate cut. I think markets got ahead of themselves. The 10-year was trading well lower than it is now. The Fed cut, and then we had some surprisingly good data. So we do think the Fed is going to continue its cutting cycle, right? We stick with the Fed guidance because it always makes sense to do so. But we think that the Fed is in a very good spot now because the data continues to come out good. ISM was positive this morning, and yet our main inflation reads are still coming down. I mean, there might be a blip here and there, one being slightly higher month over month, but we think the Fed's in a little bit of a Goldilocks scenario right now from an interest rate outlook. But keeping in mind that interest charges on our debt are one of the biggest spending things that the government has. The government wants yields to be lower, so we do think that they're going to follow through on their rate cutting outlook. It's just while the data is good, and they might go a little slower than originally thought. But I'm a big proponent of bonds, and I'm a big proponent of locking these rates in right now.
And the bond market is something that we are keeping our eyes on as we head into not just the rest of this month, but the rest of this year as well. And speaking of which, it did seem as though all year we're counting down the days to November 5th, but the countdown to Thanksgiving, the holidays, year-end is already on. Hard to believe, but here we are. And this is also the time of year, I'm sure, that you're getting approached by clients asking how to save on taxes. So give us an idea of some of the tax planning that you're doing with your clients and some of the conversations that you're having right now.
Absolutely. So if we could bring up slide 1 when you get a chance, that'd be great. So, I know it sounds a little overly simple, but, we have a couple great year-end tax planning guides. And, what I like about using these guides is that it's going to force conversations anywhere from health savings accounts to 529s to gifting stock. You can see right here on the worksheet that, the first section, considerations, will you be subject to taxes on distributions from investments? Certain investors have the ability to either withhold income or defer it to a later date, and sometimes that makes sense depending on where you are currently with your taxes. But this is a great document. It's very encompassing, and we've had great conversations from it. And I mentioned the health savings account before, and it's not a very large amount because a family can put $8,550 into a health savings account. But you can invest that money if you don't spend it all on health care. But that is true tax avoidance. It's not deferral, right? So we're a big proponent of maxing that out if you can, and whatnot. And then I would say, like even the next bullet point, have a fully funded education savings account. Certain states allow deductions when you contribute to a 529. So it's really my job to make sure that we've checked every box, right, and that we're trying to squeeze out as much as we can. And this guide has helped in the past. A few years ago, a client of mine had a very high growth private company, and when we were doing our year-end tax planning, I suggested using an illiquidity discount to remove some of those shares out of his estate, right? So that was a home run because the company has increased revenues 200% since then, and the stock has probably doubled. So he was able to get a lot more of it out of his estate because we were proactive. So, very good document that we use. And then, let's see. And then you can even see, right, this is even good for small business owners. So it's going to ask them if they're eligible to contribute any more to a retirement plan. And then typically I'll take it a step further where we make sure that retirement plan is efficient as possible, right? Are the fees as low as they should be? Is there good corporate governance? Are all of your employees contributing to the plan? So we make sure it's a very healthy plan fiscally, and that the business owner is doing the right thing. And and then there's charity, there's estate planning. So it's definitely a conversation I'm having a lot with now because as you said, taxes are a certainty, and anytime I can reduce those, that's a win for everybody.
And I know that as we continue to move through this year and head into year end, you're going to get these questions, but are there any changes in terms of contributions that people should be keeping in mind, whether it's small businesses or individuals?
That's a great question. So I don't have the exact numbers available, but I can tell you that it seems like every year the amounts that you can put away go up a little bit. The health savings account used to be $7,000, now it's $8,550. 401k contributions are going to go up significantly. Even the amount a business owner can put away in a qualified plan is probably going to go up. So, for those that have the ability to put money away, there are a lot of tax savings that are going to happen in 2025 from the higher addition amounts.
It does sound as though some of those amounts are minimal, but that can all add up and make a difference.
Sure. I mean, I'm going to go back to the health savings account a third time, but if you think about it, $8,500 you're putting away. You're paying your health care with pre-tax dollars, which is a good thing. But if you don't spend everything every year, and every year you keep putting that in, over a period of time, that's going to be a significant growth that you've created, but significant tax savings as well. So, as you said, if we go through this every year, right, we're not looking to make any huge changes, but as long as we know that we've squeezed every tax savings out as possible, over an investing lifetime, that will be considerable savings.
And Dan, now I want to shift our conversation over to direct indexing.
Sure.
So for our viewers who might not be as familiar, can you explain why this is and why this matters?
Sure. So could we go to slide 3, please? All right. So just bear with me 1 second. Okay, so direct indexing is actually kind of the newest version of passive investing, and it's something I do a lot because inherently with direct indexing there's a tax loss harvesting component. But essentially, if we think about passive investing, started off with some index mutual funds in the 80s, moved into some ETFs, which are still huge, but we feel like direct indexing can actually add more tax advantages. So really what it is, direct indexing is, it provides index-like returns by investing in a separately managed account the underlying securities of the index, right? You might, if you own the if you're trying to replicate the S&P 500, you might not own all 500, but you're going to have a very equal weighting of all the sectors, and in the end, the performance is going to be very much like the index itself. What's different about this versus an ETF or an index mutual fund is that the portfolio managers will look to continually realize losses, right? So if you think about the S&P 500, on any given year, even when it's up, right, you could have 10 to 20% of the stocks have actually finished the year with a negative return, right, even though the index as a whole is positive. So what we look to do is we look to harvest those losses, right? So if you have a loss on Walmart, right, we'll sell that, we'll buy Home Depot. Maybe if you have a loss on Coke, we'll sell that, we'll buy Pepsi. But by continuously harvesting losses and then of course replacing, what you do is at the end of the year, now you have all these short-term and sometimes long-term losses that you can use to offset gains from the portfolio itself, or if you have gains from another sale you did. Active tax loss harvesting will help out, and it's going to change. Like a year like 2022, the losses that were realized were much bigger than a year like 2024, but the tax alpha that loss harvesting can give you can be anywhere from 1 to 3% a year in normal circumstances. So it's something that we like a lot, and the other reason we like it is because it can be customized. So if we can now go to slide 4, we'll talk about some of the customization features. All right, so when we're talking about direct indexing, there are plenty of indexes to choose from, right? You've got the S&P 500, the Russell, MSCI EFA if you want to do international, but we can do a lot more than that. So we can put different screens on there. We can choose something that's, maybe you want to do all cap because you like the small cap and the large cap combined. As I said, international. But what's interesting is that we can also do what's called style tilts. So we can take the S&P 500, and for younger clients, maybe we can put a growth tilt onto it, so it'll have more of a growth emphasis to it. Whereas if older clients that need income are doing direct indexing, then the tilt we're going to put on there is enhanced dividend, or maybe an income tilt, right? So that in this portfolio will hopefully throw off more income than the index. And then also, there are people that just say flat out, I refuse to own certain industries, whether it's, defense industries or gambling. They just won't own it at all. So most direct indexing companies have the ability to just completely exclude a certain subset of stocks. So, we think it's great because customization for the client, constant tax loss harvesting and tax alpha, and index-like returns, because most active managers don't outperform the benchmark, so this kind of gives you a little of everything.
Yeah, I think you've given us such a great overview of what direct indexing is, and even some of the tilts there, I think that's very helpful.
Oh, thank you.
Yeah, especially if you're thinking about the time horizon for investing, older person who might be edging closer to retirement or
Sure.
perhaps is in retirement versus someone who is just starting out on their investing journey.
Sure.
So when it comes to direct investing, is it for everyone, or are there some pros and cons that you would like to highlight when it
Sure.
comes to direct indexing?
Sure. So if we could just go to slide 5 now. So the main thing I would say is that you never use IRA or qualified assets for direct indexing because the only tax ramifications occur when you take the money out. So this is strictly for taxable assets. But people that use direct indexing, they could have a liquidity event where they want to sell a home or they've sold a business, and yet they want broad market participation, but they have losses to offset elsewhere. So they'll use this direct indexing in the beginning of the year to build up the losses. That way it'll help offset the gains they had elsewhere. Some people that don't believe in active management, that purely believe in passive, they will probably go to direct indexing because they're going to get the index-like return, plus they're also going to get the tax alpha. So this can very much be a core allocation as well. It doesn't have to be a specialty strategy. And then this is actually something I just did the other day, but we had a family set up a trust, right? Revocable trust, put the house and some of their taxable money in there. But the problem is that the trust, assets held in trust, will often get taxed at the highest ordinary income tax rate. So, that's not a good thing. So what we tried to do is, in this case, right, we're actually going to go for what I mentioned before. We're going to go for an S&P 500 index with a growth tilt and minimize income. Because if we can use the losses to offset gains and it's not throwing off a lot of dividend income or other interest, that's a pretty tax efficient vehicle that I can use in a trust. So I would definitely say direct indexing is good for trusts that are in the highest tax brackets.
Yeah, I think it's also very helpful to talk about different scenarios here when we're talking about something like direct indexing.
Sure.
Because each case is quite different, and when you're bringing in a trust, that's also very different from, say, an individual who is not relying on a trust.
Exactly, exactly. Yeah, I mean, every situation is a little different. One thing that we actually do, and direct indexing has helped me also, is that I've had clients that had legacy managers, right? And the manager did great years ago, but unfortunately, for whatever reason, he or she is underperforming now. But clients got huge unrealized gains in this manager. So, they might not be happy with the current performance, but to just sell the manager out, that's going to be a problem. So what we can do in a situation like that is using direct indexing. We can do what we call a tax transition analysis, right? So the PMs will basically compare the portfolio to whatever index it looks like the most, right? We'll agree on some kind of level of tracking error, which means that we don't want to realize all the gains right away.
Okay.
So by not doing that, we realize that performance may be a little different from the index, but at least for now, the goal would be to preserve, not to trigger the taxable gains. Whereas, other investors might say, no, I really need to, I need to match the index as much as possible. Just realize as many gains as you do now. So it just comes out to what the client wants. But these tax transition analyses are a great way to get out of underperforming managers with large gains. Sorry.
And when it comes to this tax transition analysis, can you walk us through this process? How does it actually work?
Sure. So, basically, the tax transition manager is going to take all the holdings and their weightings within the portfolio, and we're going to try to find the index that the portfolio best matches to. And most of the time, it's going to be whatever benchmark the manager compares herself to or himself to. But in this case, we try to find the appropriate benchmark. So let's say we have a portfolio that does actually look like the S&P 500. As I mentioned, the manager will give the client, say, 3 to 4 different scenarios, where we'll say, this scenario is going to cause the greatest amount of tax, but it's going to give you the smallest tracking error. And then vice versa, we can have one scenario where the tracking error will be big, but the manager is going to realize gains over 4 years. So the client can deal with the tracking error because he wants to push off those taxes. So as I mentioned, it just comes down to what the client's comfortable with, but it's very, very, you can see through it. We show everything totally clear and transparent, and the client always knows exactly what they'll get when we do these.
And finally, Dan, before we wrap it up for today, I do want to ask you, I'm sure you've been advising clients throughout many market cycles, election cycles, and we're here about to head into year-end and wrap up the quarter as well. But as we look beyond 2024 and into 2025, what are some conversations that you're having with clients about what to pay attention to?
That's a great question. I would say this market has lasted quite a long time. It's one of the few times that a soft landing seems to be engineered out of a large rate increase. So I would say statistically a recession is due at some point, right? Doesn't mean it's going to happen next year, but it could. So I would just say, after the election frenzy goes away, and after the the market goes through its strong part of the year, let's just make sure that the data continues to surprise for the upside next year, and let's make sure that everything's healthy, because if that's not the case, if all of a sudden growth starts to slow, the market is not priced for that. Not to be Debbie Downer, but as a risk manager, that's always my job, is to look for the problem and hope it doesn't exist, but at least to be aware of it.
Yeah, you bring up that key word there, and that is risk, because if we look at the equity markets, as we mentioned at the top of our interview today, the double-digit percentage gains that have continued despite all of the volatility we saw this year and through all the unpredictability, because heading into 2024, there had been expectations of rate cuts from the Fed, and that had driven the market gains seen at the end of last year in 2023. So here we are in November, we got the first rate cut from the Fed in September, and we're fast approaching the November meeting, and there are expectations for further cuts, but we know when we're talking about things that investors, consumers care about, property prices, housing, a lot of that does hinge on interest rates and where the trajectory goes for the Federal Reserve.
Yeah, and as I mentioned, it's a great time to be locking rates in. Especially since rates have backed up since the cut. So if we follow Fed guidance and buy some longer maturity bonds, I think we'll do fine.
Okay, Dan. Well, thank you so much for joining me here at the New York Stock Exchange.
All right.
Thank you very much. And that will do it for Global Money Talk live from the New York Stock Exchange. We're so excited to bring you daily coverage here on Sanpro TV. You can check out the show anytime on our YouTube channel by searching Global Money Talk. Thank you so much for joining us. We'll be back here bright and early tomorrow morning. Have a great day.